And the funniest thing about the whole thing is now I'm getting people that I knew in New York calling me up to ask for dental advice, or like even pitching me to, be acquired by them. And it's like, it's really funny how like small the world is, and everything is just really, it's almost like everything is, connected in some way.
Hello, ladies and gentlemen, and welcome back to Commercial Real Estate Secrets, where I'm your host, Austin Hare, and our guest is Peter Alemis. He is the Chief Development Officer at Family Dental Care in Chicago. Now, they have a long track record. They actually started in 1986, and they currently have 7, about to be 8 locations under wraps. And so, Peter, it's a pleasure to have you on the show today.
Hey, man. Great to be on. Bright and early Saturday morning. I'm pumped.
Yeah, heck yeah. So, I think you may be our first chief development officer that we've had on our show. So can you do me a favor and just explain to our listeners kind of what that job entails?
Yeah, it's a pretty broad and like all encompassing job description, but it's anything from, basically any function that has to do with expanding or developing the business. So for example, one day I might be looking at an office to purchase, another day I might be working with a GC, a general contractor, to build a current building. Another day I might be, building partnerships with local universities to help hire different people, different key executives. So it's anything that has to do with like the strategizing of the long-term vision of the group. So, it's like every day I'm doing something different.
That's cool. And so what about in terms of acquiring new practices? Are you doing any of the selection? Are you doing any of the negotiations, anything like that?
Yeah, totally. So very heavily involved with lawyer negotiations and all the financials behind it, financing, if we're doing financing, acquisitions. We just acquired an office a few months ago. So that was, I was pretty much, the key man on that person, from actually sourcing the office to negotiating to actually, closing the deal. So that was a whole 6-month process. It's a long one, but yeah, definitely super involved in that process.
So what's the story at Family Dental Care? I know you guys are located in Chicago, but 1986, I mean, that's a long time. That's way before DSO was even a concept. So you guys, I'm assuming, like most, started with one location. What's the story of the first one, and when did you guys decide to start expanding?
Yeah, so we're a family-owned business. It was founded by my father in '86, and he basically really wanted to strengthen that one office, and he started it in Chicago. It was in South Chicago, and he actually didn't get another one until 14 years later. So he really spent, his first 14 years was just honing in on that office, and then, like you said, it kind of became a thing that DSOs were sort of like becoming in vogue. And it wasn't even that we were riding that wave. We just were basically analyzing the market, and we're looking at, well, where are the patients coming from? Okay, they're coming from this zip code. Well, why don't we have an office in that zip code? And we sort of just followed that exercise, and that's kind of taken us to today, where now we have, 7, soon to be 8 offices, and they're all basically centrally located and, all within 5 miles of each other. A much different strategy than other folks that are, buying an office in Arizona or Florida, and sort of like not really having that, strategic geographical.
Yeah, I think that's smart. It's like you can either go deep or wide. And a lot of times when you go wide and you try and get the whole country, then you just expand too thin. And when you're going deep, which is where lots of locations and high saturation and a close proximity, you're really putting in deep roots. You're growing your roots really deep, and you're developing more of a network of, I guess, patients and referrals and even employees and stuff like that. And so, yeah, I totally understand why you guys are doing what you're doing, and I think it is a great strategy. So let's talk. What was it like? For 14 years, essentially, you just focused on that one location, or I guess your father did. So was there any sort of niche that he was working on, or what was that? What did that 14 years look like?
It was always just building the brand and building the quality of the dentistry, and the niche was always, basically providing quality dentistry in underserved areas. That was always like the original sort of like mission statement, if you will. and focused a lot on basically implementing, policies. And he's written over 3,000 policies on how to run a dental office and getting the best practices in. So, that took a lot of time for him to put that together. And now we're at a point where when we acquire an office, we're able to just implement these policies and strategies and just, basically add water and mix. It's very, obviously took a lot of time to get there, and now we're at a time, now we're at a point where we can just steamroll and just keep growing.
So you've done both acquisition and de novo, right?
Yeah, that's right. We've done probably almost like a half and half.
How do you decide, like, when does something pop up on your radar? Like, what's your rate of growth, and how do you decide, okay, I'm going to do a de novo or an acquisition?
Yeah, it's sort of like it's very opportunistic and case by case basis, but honestly, it's like it's whatever we see fit at the time, right? So we did a de novo 2 years ago, and it was basically in an area that was hot and growing fast, and we figured there's not much dental around here. We should build, and we should just make it happen here. So that's one case, and then the other scenario where we saw an office that was already running, decent shape. We didn't have to put much capital expenditure in it. And we figured, you know what, let's just acquire this office. So it's very much a case by case basis.
And so with the one that you saw was up and running, are there certain revenue parameters, like minimums, that they have to hit, or is it mostly just based on geographic location?
Yeah, no, it's a mixture of everything, right? So it's like the short answer to that is if we see a guy doing minimum 500K a year, he has proven that that office and area work for him, and we'll come in and 4 to 5x it within a year. So as long as he's hitting certain, if certain revenue targets, it shows that it's a viable area, it's a good geographical space. We have a whole like different analysis that we do on where we purchase or where we build, and it makes sense, then we go for it. But if we see somewhere where there's no future, and let's say a doctor's been there for 30 years and he's only reached 200K in revenue, it's like, well, if he can't do it, what are we going to do? That's sort of like where how we think about that.
That makes sense. So, they have what's called like the dark tunnel, right? Which is where you're kind of between 3 and 10 locations for a lot of people. Because like you can get lending on the first one, that's really easy. You can get lending on the second one. But after that, banks start to get a little hesitant. It's like, can you really do this DSO model? You guys, do you feel like you're in that dark tunnel right now where it's hard to get funding, or are you bootstrapping everything, or have you kind of come out on the other side?
Yeah, it's interesting because it's sort of like there's two sides to that. Is like we've done very well in terms of like funding acquisitions and de novos with existing cash flow. So we've been able to just sort of like recycle cash flow that comes into the business to acquire or build other practices. But we've also been approached by many lenders, and we have many great lender relationships. And it's one of those things where like you use a lender when you don't want to because the rates are so low. It's like, borrow money when the rates are low, even if you don't want to. So we've been approached by many lenders, and sort of like, I would say we're out of that dark tunnel. And what I've seen as like the norm from some of my banking relationships is they would rather lend office per office versus here's a $10 million loan, go out and buy 20. They would rather just take it one by one, and maybe that's them being conservative, but that's sort of like the norm I've seen lately.
So, okay, it makes sense. You've kind of proven your model. You've essentially recycled your capital, or bootstrapped it, if you will, to get to this point. And now banks have saying, all right, you've got a viable model. And so do you plan on kind of doing one location per year? Is that kind of the trajectory that you're on?
Yeah, I would say, I mean, look, we have the system pretty down pat right now. So if we were to just keep rolling as we are, I could see this, if we really wanted to, 3 to 5 a year. I mean, honestly. But I think we're going to do another one hopefully this year, maybe 1 or 2 next year, and then kind of like go from there. And, like I was alluding to earlier, we have the system down pretty pat, and we're ready to just keep, really what it comes down to is the human capital.
Yeah. Yeah, and well, speaking of that, I know it's hard to recruit right now. It's hard to find associates and hygienists and everything. But also, you're in
Yeah.
Chicago, and I know
Yeah.
that there's three prominent dental schools in Chicago. So, are you guys also having problems recruiting dentists, or have you been able to kind of avoid that?
Well, no criticism to the dental schools, but a lot of them, which is really odd, they don't allow on campus recruiting. It's very interesting. And it kind of doesn't make any sense because the market is very interesting. The industry in general is interesting because these dental students are coming out of school with like $500,000 of debt, like more than ever in history. A lot of them, especially like the groups our age, they don't want to be entrepreneurial and go out and like have their own little venture. I think like the generation before us, people are all about, great, I finished dental school. I'm going to go find an office. I'm going to build it. I'm going to be Dr. Austin, Orlando, whatever. Now the market is very much like, hey, I have a bunch of debt. Who can pay this debt down for me? Which group has the brand recognition that I can just get hired to? I might not, learn the most or might not have the most mentorship, but I'll just join this group. So where we struggle is really being first to market to attract the students, and we have a very thorough mentorship program and business training and really honing them to just be really great all around doctors. But it is difficult when the schools don't let you recruit on campus. You have to try to sneak your way around that, and then two, you just have like the big box name brands that are out there. So it's sort of like us fighting with all of that. And also COVID. I mean, a lot of people, didn't even want to go out and work. So it's an interesting market right now.
Yeah, definitely. Um, so you mentioned, kind of recycling capital to fund new offices. What about the real estate component of things? So you're doing mixed novo and acquisition. Are you guys, do you have a preference for buying real estate or leasing real estate?
You know, we've done both. I would say 80% of our offices, we own the real estate and we lease the remainder. Um, I would say that overall, we've always found it more amenable to us to own the real estate and just have, cash flow for life. It's like,
Long-term hold strategy?
yeah, it's always been just a better strategy to just own the property. I mean, real estate in the long term never is really going to appreciate. It's like never really going to depreciate. I'm sorry. And especially in the markets we are, they've always been growing. So it just makes sense for us to own the real estate and um, just have not only own the operating assets, but also own the real estate as well.
Does it ever become difficult to do both? Because to own commercial real estate, you need large down payments, 25, 30% down. These commercial real estate buildings are hundreds of thousands, if not sometimes over $1 million. So do you ever find yourself in a situation where you don't have the cash flow to do both the real estate and the but purchasing the operations, or has that not been an issue yet?
It's never been an issue, luckily. But where there's been an issue is where we really like an office, but we don't really know the area as well, and we'd rather just de-risk the asset by renting. But the broker or the seller only wants to sell the real estate plus the operating assets. So that's where it's gotten difficult, is sort of like trying to negotiate: do we buy the real estate? Do we rent?
Does that happen a lot? How often do you think that happens?
I mean, so let's say in the last like 50 offices that I looked at, I would say maybe like half of them were kind of like a similar scenario where the seller wanted to sell both real estate and dental, and was hard to negotiate that we only want the renting the space.
Right. And
I
then
don't
are
know.
those
Yeah.
retail locations or are they like office locations? Like what kind of spots are these that you're looking at?
Yeah, so it's been a mix of everything. Office. There's been, the latest acquisition we had was in a shopping center with a pretty large anchor tenant, and it's a busy office. And for us, it was like it's a clean office, rapidly expanding area in Indiana. You know, why not just start and plant our feet here? Why bother to find a property to buy when we already have a working installation here.
Yeah, definitely. A lot of people think that because we're commercial real estate brokers and agents that we encourage people, and we do like buying real estate. They think that we encourage other people to always buy the real estate, but it's just not the case because, like you said, there's so many factors, right, that go into it, and you're going to get a better return most likely by reinvesting in your business. And depending on these areas, they could change drastically. So we always coach, like, do what's best for the business first, and then like real estate shouldn't be the determining factor. That should be your secondary factor. If you can buy it in a great location and you want to buy it, great, but don't trip over. Don't let that cost you a great opportunity or a great location. And it sounds like that's exactly what you guys are doing, which I think is smart. So, but the places that the doctors typically want to sell the real estate, are those office, like condos, or are those retail locations?
They're mostly retail. Yeah. I mean, we've
like single standing buildings.
Maybe a couple tenants as well, but the doctor happened to own the whole, like, I wouldn't even call it a shopping center. It's just sort of like maybe a multi-tenant building.
Okay. And so they want you to take the ownership of the entire building.
That's right.
So actually, yeah, that's something that my group might be interested in. So if you guys find yourselves in a bottleneck like that, where you're willing to sign, I'm guessing when you take over, you're signing a 5 or 10 or 12-year lease or something like that.
Yeah, generally what we like doing is a 5-year lease with a couple 5-year options to renew. That way we're secure enough where we have it long term, but we're not like tied down long term from the onset.
Okay. Yeah. We can, I don't want to bore people with all the details, but after this recording, we can talk more about that in depth for sure. But yeah, in general, we're
doing a live deal. We're doing a live deal here, Austin.
Yeah. Okay. So, and then I'm just curious, like, how did you get into this business yourself? Obviously you said your dad started in 1986, but what was your path like?
Yeah, it's kind of funny. It goes full circle, but I was always, like, growing up, just very much pushing it away. I didn't want to be in dental at all. I didn't want to be a dentist. I was like always like finance focused. Even from like the age of 13, I started investing in the stock market, and I just had like this bug for finance, and I just loved that. So I obviously didn't become a dentist. I went out to New York. I lived in Chicago. I went out to New York to do investment banking. Spent a couple years doing that, and totally coincidentally, but towards the end of my time there, one of my largest, deals that I was on at the time was actually a dental company, and it kind of went full circle of like looking at
trying to avoid it,
and then you end up working on it, for like weeks straight, and you realize like, oh wow, dental is actually such an amazing model, and now it makes sense why all of these private equity folks are coming in and trying to acquire dental companies. And long story short, I moved back and have been doing this for 5 years now, doing operations and business development for the group. And the funniest thing about the whole thing is now I'm getting people that I knew in New York calling me up to ask for dental advice, or like even pitching me to be acquired by them. And it's like, it's really funny how like small the world is, and everything is just really, it's almost like everything is, connected in some way.
Yeah, totally. No, that's really cool. It came full circle. So are you still investing actively in the market?
Yeah. In the stock market.
Yeah.
Yeah, definitely investing in the market. And then also have been doing some venture capital as of late. And that's sort of been most of my focus, just because I feel like there's more opportunity in the private market. So, with a mix of equity, VC, and then dental, keeps my schedule pretty busy.
I just actually had a call with a VC guy in dental the other day. There's not really a whole lot of VCs in the dental space, right?
You should connect us, man. There's really not. There's really, I have a friend of mine who his VC firm, they basically invest in medical technology. So a lot of their LPs, their limited partners, are doctors and dentists. So there's that model, but yeah, it's
it's called Revere Partners. I'll send you the info as well. But yeah, it'd be interesting. So,
awesome.
So you got a three-prong kind of split approach to, but it sounds like you're all in on dentistry now.
100%. Yeah, it's been very, very, rewarding. And the fact that we grew during COVID, really is a testament to just how recession resilient this business is. And
Yeah.
it's, you want to be part of a business that is continuing to grow.
Yeah, well, dental grew in 2008 after the Great Recession, and then it grew again during COVID. And so, yeah, I think you're absolutely right. It's proven to be very, very resilient. And I think people are catching on. I think it's making a lot of waves and attracting a lot of attention. Back to the real estate real quick. Do you guys have a preference between office or retail? Like, is that something that you're consciously thinking about, or is it more or less what is the production that these offices are doing?
Yeah, it's more of like looking at every single part. I would say on the whole, though, probably retail is more of our focus. Like we'd rather get a retail space versus, like the other extreme is like a dental office that's like on the third floor, suite 401 of some no-name office building. Like that dentistry is done. Like that's like from the 80s. That's no one's doing that anymore. No one wants to walk in to this carpeted, two operatory office on the third floor. It's like, no, people want big, nice, pleasant retail.
Convenient as well.
Convenient, yeah. So I think that's the future, and that's the model we're gravitating.
Yeah, that's smart. Yeah, I mean, as Tony Robbins says, success leaves clues, and that's what the big DSOs are doing. So there's
100%.
Obviously a reason for that. So, all right, what do you think are going to be the biggest bottlenecks and the biggest challenges for you guys coming up, both real estate related and just in general?
The first answer I had for you is hiring. I mean, we hire a lot, but where we lack is really like finding a lot of talent, especially in like the regional to like executive level talent that wants to join our group and be part of like the growth. And we struggle with, we have a very, rigorous training academy, and it's almost like we just have to hire someone with no experience and train them for 5 years and then make them operating managers, because we've hired from other dental groups and it's never worked out. So I think the biggest bottleneck is just having the people to do this, because we have the systems in place, we have the capital, we're ready to just go out there and acquire offices, but where we lack is having like the people there to ensure that quality control is in and all these other factors, and basically that the line of the machine is running.
So yeah, I hear that a lot about hiring.
Yeah, totally. I mean, that's a factor. Another factor is, with the dental schools, like, I don't know what's going to happen. Are they going to be with, less, are they going to be resisting to us coming in to hire them? I don't know. So that's a factor. And then the other factor too is like you mentioned, like people are getting wind of the DSO model, and you have 80 private equity groups in the space. And I don't know what that's going to do for the market. Are people going to be so consolidated that it's going to be all these big box brands and Walmart dentistry and all this going around? And then does it have like the reverse effect where now people say, you know what, I don't want to go to a group brand. I want to go to like my local doctor. So that might not happen for another 5-10 years, but that's also a factor to consider.
Are you guys, speaking of that, like, is that why you chose the name, Chicago or Family Dentistry?
So the full name is Family Dental Care. The website's familydentalcare.com. It's a pretty A+ domain, if I may say. But we've always found it to our benefit to just label and brand all of our offices as that brand, and it just has really multiplied the growth. I think there's some groups, which I won't name, that they will buy out offices, but they won't change the name to a brand. They'll keep it the same. Okay. I can see that strategy as well, but we've always felt that just keeping it the same brand has strengthened it's very synergistical, because you drive, you see Family Dental Care, you drive 5 miles later, you see it again, you drive again, you see it again, and then it kind of sticks like, oh wow, they're a big company, I should go to them.
Mm-hmm. Yeah, no, that makes sense. It's definitely a way to combat that big box corporate feel, is keeping that name public. And then because the whole idea of the dental support organization is that you're providing support for all the stuff that dentists don't want to do. like all of the
100%.
back end business related things that don't involve, physical dentistry and operations and procedures and stuff like that.
That's right. And 90% of dentists don't want to even touch that.
Yeah. That's why I went to dental school to begin with. Yeah. Um,
That's right.
yeah. So, and then, maybe go off on a tangent a little bit here, but it's interesting that you started trading at such a young age and then you went to New York. And so, I sometimes I like taking a step back and looking at the macroeconomic picture to, help make decisions. A lot of people, you hear people on both sides, right? Some people say we're propped up right now on fake, money printing. We're all pumped up on methamphetamine as if you will, as a metaphor. And then other people are saying like, well, the economy's never been stronger and it's going to continue growing. So what side do you sit on, if at all? And how does that affect your like investment strategies moving forward?
Well, there's a couple things. I feel like so I guess one of the reasons why I've ventured into, no pun intended, ventured into VC is like you're able to sort of invest in an illiquid asset that doesn't really suffer from much volatility. And if you can pick some good winners and find them early enough and just ride the wave, that will pay off dividends. I mean, we got into Robinhood like 2 years ago, and
Pre-IPO?
pre-IPO,
Wow.
yeah.
How were you able to get into it?
Through a friend of mine, actually. A friend of mine knew the co-founder, knew Vlad, and we invested pre-IPO, and now that's
What was your ROI on that?
I mean, I think I'll probably be able to liquidate shares in December, but at this point, like just looking at it, it's probably minimum 7x ROI, 7x, like a multiple. Yeah, which is amazing.
So what about like those are the home runs, right? But
yeah,
you got to get a lot of bat. And so Amazon has a quote. He's like, swing for the fences because you'll miss 90% of the time and you'll lose 100% of those bets. But every one is going to give you 1,000% ROI, right?
100%.
And so it's like that outweighs all the strikeouts. So do you have any like rules of thumb when you look at venture capital and pre-IPO investment situations where it's like, okay, like I got to do 7 deals for one to work or whatever.
Yeah, I mean, it's honestly like you're totally correct. Like basically the playbook is like, let's say you do 10 investments, 8 of them will fail. One of them you might get your money back, and then the 10th one you will make up for every single one that you lost on and more. That's sort of like the playbook, right? A VC. But for me, at least, because I'm not working with like $1 billion fund where I'm just can invest in 100 deals a year, what I look at is I really try to pay attention to the founders early on, and just see if I can be helpful. We got into a buy now, paid later platform called Cherry, which I got to know the founder really well. And they're basically only focused, primarily on the dental space. And we felt that because we could help with our connections and help the founder with, whatever advice, and we even piloted his program in our offices, that's something we looked at as like, wow, we're going to really try to make sure this investment does well because we can actually add value. If you're just like, oh, okay, I don't really know the company, I don't know what they're going to do, here's like 50K, whatever, that's going to usually not do well. But if you really take the time to like find a founder that, has grit and, has a great story and you can kind of see the future of the company, that, you can never go wrong with putting a bet there.
Yeah, I agree. It's so much more about the founder and his ability to execute than it is about the idea because everybody's got ideas. But how do you test for that? Because sometimes it's these guys' first venture. It's their first attempt at this. So how can you tell if somebody really got grit?
Yeah. So yeah, totally. I mean, number one, you have to really get a feel for the person and just kind of be like, do I want to get in bed with this founder and really like ride the wave with them, right? So that's number one. Number two, we're not like looking at something that's so early where there's no track record. So at least there's like something. And then everyone always has a track record, right? Like, even if this is his first like company, he or she did something prior, and you can kind of like put the pieces together of like, okay, great, you were an Olympic gold medalist, or you did this, or you actually somehow came from Peru and immigrated to the U.S. and made it go right. Like, so you look for different indicators like that that are like, wow, this person is able to withstand tough times and just make it go right. And I think ultimately that's what, that's who wins in the end.
Yeah, that's really cool. So, back to dental, there is, like you mentioned, 80 private equity groups. That's obviously driving the price of dental practices up. How, like, at some point, to me, this is just my opinion, but it seems like you're going to have to get to a point where the multiples are so high on these locations that it just makes sense to do de novo. Now, I do understand there's exceptions to that, and there's always things that, like, if you have a good value add system, like you mentioned, your systems are down packed, that you can just go in there and put them in. Like, I get that. But at some point, still, it's like, you're going to be taking on so much money to pay these really high multiples that it's like when you do a de novo, you kind of got a 2-year run rate of operating at a loss. But at that point, it's paid for itself, and you're really only just paying for those operating losses and the the equipment or the rent or the real estate or whatever. So like, how do you guys process that situation?
Yeah, it's a balance because we might go to let's say we might go to a broker that sells that brokers deals for dental offices, and we might have been paying in the past, let's say 2 times EBITDA for a dental office, and now the broker's is pushing for us to pay 4 to 5 times, which I think is a little absurd for like a solo location. So there is a lot of negotiation on that part. But I ultimately think that, at least for now, we would rather pay, like, let's say 2 to 3x EBITDA on an already established office and then put in some CapEx, and then from day one we're operating, than spend 2 years, with a general contractor and designing and building and then marketing the office and then getting it ramped up. So, I mean, we've done both, right? And both have been successful and work, but it's a balance of looking at, do we want to just get in the market right now and just buy this office, or do we want to spend a lot of time building a de novo and getting in the market and marketing for it and hiring the people? So it's a balance. But to your point, it's like, if it gets to the point where we're really overspending for this asset, like, why are we even doing it? But Charlie Munger has the quote, or Buffett, like, you rather pay a fair price for a good business than a good price for so whatever, we, as long as we see that we can.
Yeah, people spend so much time looking for cheap prices, right, on businesses, whether or not they're good. It's like, why not just pay fair price, right, for a good business that's gonna appreciate over time? 100%. Yeah, that makes sense. But I guess at a 2 to 3 multiple, I mean, that I do those all day, right? It's just, I feel like those are fewer and further in between, because now you're saying 5, 6, 7, X on their revenue or on their earnings, and then when you get to group practices, those are 10 to 14 and up. Right. I just was curious if you had like an over under, like if an individual doctor was, if they're doing a 4X, is that a deal breaker, or does it have to be a 5X or a 6X? You know what I mean? At what stage do you guys think like, maybe I'll just do de novo, or would you just continue to look for other acquisitions?
We look at the whole package, right? So if the doctor is stuck on 4 to 5X, we say, great, well, how long are you going to stay on? Do you want to sell and leave in 2 months? Then we're absolutely not paying 4X, right? But if you want to stay on, maybe you want to give us a deal on the real estate, maybe you want to, ensure your patients are all like taken care of, that we look at that. We've had some offices that say, hey, I'm retiring. I don't want this office. I want to sell and leave. Yeah. That's a different multiple than someone that's like, hey man, I want to be your partner for the next 2 years.
Yeah, for sure. Do you guys give them the opportunity to buy into the overall company, or encourage that? So in order to create buy-in, and then also 100%, to lower your acquisition costs?
Yeah. So we've actually, at this point, we have 7 equity partners in the group, 7 basically dentists in our group that have bought in, and they're partners, and they've all worked for us for 10 to 15 years minimum, and some 20. And our plan is to keep getting partners, because the partner model has been really successful for us, because It just creates aligned interest. And when all, the more aligned the group is, the more successful we are. And by having someone be responsible for the bottom line and be a partner in the group, it's like, we expand more that way than having disaligned incentives.
Yeah, I agree. Okay. And then one of the last questions I always like to ask is, what was your most influential books, preferably like business books, development books, and also some of your favorite and most influential podcasts?
Wow, good. That's a loaded question. So in terms of books, a book I love always referring back to, and it's always been like a big, it's just been a big help of mine. It's the 10X Rule by Grant Cardone. That's a really great, simple book. I mean, I literally could read that book in an hour and keep reading it, and it always pays dividends. So that I'll put that as my book, because that's the first one I thought of, and it's a great read. So that's nice. A great book. 10X Rule. And then in terms of podcasts, I'd like to really like just diversify anything I'm reading or digesting or listening to or whatever. And so one of the podcasts I thought of that I really liked, at least I listen to a lot, is it's called No Camera, I believe. It's by Sam Jones, and it's strictly for artists. It's an actors and actresses podcast, and he really goes deep in like their whole life story of how they got to where they are. And I find that just anything that I can really get info on someone's life story is when I really like learn. For example, a lot of times you'll see like the people interview on TV, and they're on TV like social talking for 10 minutes and maybe shilling a product, and that's it. You don't really learn who the person is. So the fact that he really digs deep in like learning, hey, how did you get your start? What were your parents like? What did you do? What did you struggle with? How do you make money? Like, so those types of interviews is like the long form interview of like really digging in. That's always been influential, listen for me.
That's cool. That does sound interesting. Just even if you're not an actor, just from the entrepreneurial standpoint of like, what's the mindset behind these people?
Right.
Do you have any other podcasts?
And then I've always loved, what is Patrick O'Shaughnessy has a great podcast. He has two. I think he has Founders Field Guide, and then he has an investment podcast. Patrick's cranking out episodes like every day, but he has some really amazing people on his show.
What's his name? Patrick. What's his last name?
O'Shaughnessy.
Okay.
Yeah. You should look him up.
And I'll put it in the notes.
Yeah, he's got a really amazing, amazing podcast.
Awesome. Okay, and then if anybody wants to get in touch with you guys, is there a good resource for that? Either like a email or website or anything like that?
Yeah, you can put my email in the chat or the notes, whatever, but it's peter@familydentalcare.com.
Okay, perfect. Well, great, man. Hey, this has been awesome. I know Chicago is a great area, and Indiana sounds like you guys are expanding there. I know that seems to be like a good market for the insurance paybacks as well. So you guys got a lot of positive things to look forward to in the future.
Absolutely, man. And next time you're out here, let's get a dinner.
Yeah, let's do it.
All right, Austin. Thank you.